Hello everyone, welcome to Indian Economy by Aman Soni. In today's news, sir, we'll discuss the important articles related to economy from the Hindu newspaper. In page 1, we do not have any news related to economy. Let's go to the editorial page. This article is related to economy. Ten years stack. The RBI must be ready to recalibrate its inflation projections and shift policy stance. In the previous news hours, we have discussed that the current inflation level has breached the 6% tolerance level and it has gone to 6.01%. And we also discussed that the inflation was higher in the rural areas and the rural population bore the brunt of inflation. At the same time, the consumption demand was low, and we also discussed previously the RBI went for accommodative stance in the monetary policy. With this background, this article says that it is time for RBI to rethink its monetary policy because on one side the inflation is increasing, the other side the consumption is falling, and the central bank went for status quo, and there are other problems that the economy is facing because of the global issues. RBI said the inflation is higher because of the base effect, but the uncertainty of the Russia-Ukraine ties and the repercussions it has on the crude oil prices. If the crude oil prices increases, we can import inflation. That means because of the inflation of crude oil prices is high, the cost of the crude that we import will be higher compared to what it is now. So the cost of production, the input cost itself will be higher to begin with. So the final end product would be obviously higher. So that is called importing inflation because of the higher crude oil prices, because we are importing the higher cost. And the article says, even though the retail fuel prices were slightly reduced compared to the last December month, the center will have no choice but to increase it in the coming months because the oil marketing companies will have to pass on the increased cost of the global oil prices to its consumers. If not now in this month, even in the next month, they have to do it. And that would increase the inflation further. Currently it is 6.01%. If the prices are passed on to the consumers, the inflation would further increase, and the government has other option, that is to cut the excise duties. And given the election in few states, the central government may not do this, cutting the tax, and it will also lose on the tax revenue. So the government would not be going for cutting the excise duties and tax revenues. It would have no option but to pass on the price of global oil prices. So that would further increase the inflation in the economy. And the January RBI's household survey shows that the people are expecting the inflation to be, household inflation to be 10.7 percentage. Even though this is lesser than the previous expectation of 12.6 percentage, the people still feel the inflation is going to be higher in the future. So what happens if the consumers feel that inflation is going to be higher in the future? They would not spend their money now because they feel the prices are going to be higher. They hold on to their money for precautionary purposes instead of going for consumption. And this is undesirable for the economy point of view, and the private consumption is also lagging. So the article says that it is time for RBI to rethink its monetary policy of going for accommodative stance, wherein the RBI said that in order to increase the growth, it has kept the interest rates low. The editorial ends by saying the primary objective of RBI's monetary policy is price stability, having growth in mind. But now RBI is going completely for growth in the mind, which is not good given the fact the consumption is falling and the inflation is increasing. The RBI should go for curtailing the inflation and having price stability. That's about this editorial. And in this article, the discussion is about cryptocurrency, and there is also a concept of DeFi, that is decentralized finance. So let's look at the article. The article begins by saying the 30% tax on the cryptocurrency and the non-fungible tokens in the latest budget, and they explain what is cryptocurrency. Basically, cryptocurrency is nothing but a digital medium for exchange distributed among a network of computers without any centralized authority to maintain. It is peer managed, that is, all the people on the blockchain verify the transaction, and there is a record of the transaction with all the people involved. That is the nature of cryptocurrency. One of the main things is it is not maintained by any central authority or any government. The article further discusses on the positive role that the cryptocurrency can play in the Indian financial system. And what is that? They give the concept of DeFi, that is decentralized finance. Cryptocurrency is built on the technology of blockchain, that is the distributed ledgers stored at different places with peer verification. So decentralized finance is also based on the blockchain technology, wherein we don't depend on a third party for the transaction. For example, in centralized finance, what happens? If I want to get into a financial transaction, for example, say loan, here the third party is the banks or the financial institution. I'll have to go to the bank, I'll have to apply for a loan. The bank will provide me the loan for an interest. And even when I want to transfer funds to somebody, my money would be kept with the bank, that is the third party. And if you want to transfer funds, I'll have to transfer it through the bank. That is the centralized nature of finance. But decentralized nature of finance means the bank won't have any role here. If I want to transfer money to my friend, I would have the money in a decentralized app which has the digital currency, and I would be transferring it on the blockchain, just like how cryptocurrency works. Decentralized finance uses cryptocurrency for transacting, and everyone on the blockchain verifies my transaction, so there becomes a record of that transaction. Here I can transfer directly to the other person, and there is no need for bank or any other third party. So in this decentralized finance, I can borrow, lend, buy insurance, go to a person, go to a shopkeeper, take goods from him and pay him through this decentralized finance wallet where I would be storing. So it's just like cryptocurrency, but the concept of blockchain and cryptocurrency is used for even other financial products like the insurance, derivatives, trading on assets, etc. And the positive of this is faster and it does not require any third party. For example, if I pay through my credit or debit card with the in a shop, the person who is accepting the payment, he has to pay service charge to the bank. He has to pay the merchant discount rate to the bank. But here in this case, there won't be any charge as such because it is decentralized and no third party like a bank is managing. The person accepting will accept and the person who is giving will directly give, and it is faster and it does not require any third party. That's why the name decentralized finance, because there is no centralizing authority here and the financial transaction happen without any third party. So the article says DeFi is global, it is peer to peer, that is person to person without any third party, and there would be a record of it. Is not anonymous, it is pseudonymous, meaning there would be a record of who has sent to whom. It can't be an anonymous transaction, and it is open to all. Whoever is interested in that technology can use it and use it for their transactions. And this thing has a great potential to drive innovation in the economy, because these transactions are cheaper compared to banks, as there is no third party involved and no fees that the third party is charging, but there are also certain problems associated with it. And what are those? The main people who will benefit from this are the high net worth individual and small and medium size industries enterprises, but these people may not adopt the definance concept, which is still evolving because of the tax barriers, lack of infrastructure that is currently there, and this technology is still in its nascent stage, that is it's still in its developing stage. So we need reforms for it. And what are the reforms? Probably we'll have to reduce the tax rate, and we'll have to try to reduce the speculation on such transactions. Then we have to put in more regulations so that this definance and the cryptocurrency concepts won't be used for illegal activities like black money and illegitimate political funding. And the other reforms being, we'll have to adopt the best practices from the global community into our policy making. We have to take insights from the people who are advanced in this technology, and we have to synthesize between the domestic and foreign talent so that the technology which is still in the developing stage could be developed properly, and it could be useful for the Indian finance ecosystem. That's this article is about how the concept of cryptocurrencies could be used in finance, which both are based on the technology of blockchain. And in this article, the retail inflation is easing sequentially. The finance ministry is saying that even though the CPI has reached the 6.01%, just above the tolerance level, it is going to reduce in the future because of the easing vegetable prices. The winter crop is good, the yield is good, so the vegetable prices would reduce in the future. And the RBI also has optimistic view of the inflation, but we'll have to be careful about the importing of inflation because of the crude oil prices. We discussed about importing inflation through crude oil prices. So based on all these factors, the reducing vegetable prices and better food grain output, the inflation is probably going to be lesser in the future. And in this article, consumption rising but seeing stress. There is criticism that the rural consumption is falling and there is high inflation in rural areas. But one of the factors to measure the consumption is the sale of passenger vehicles. The passenger vehicle sales have now currently slowly returning to the pre-pandemic levels. What was it before the pandemic level? And so it is good for the economy, but there is a problem, that is the increase in loan against gold. People are pledging their gold with banks and financial institutions, and they are taking loans on the basis of gold pledge. This is bad because this shows that the income levels of people are falling. There are no cash flows to them, there is no cash with them, that's why they are pledging their gold and they are taking loan on the basis of gold. The private consumption is slowly increasing, but people are holding money for precautionary purposes. Now here we need to understand the concept of what are the motives for people holding money. There are mainly three motives for holding money. Why do people hold cash? That is for the one is for the transactionary purpose, that is for transacting. People hold money to buy and sell goods, so they want to have cash with them. That is the transactory motive. The second is precautionary motive. People hold cash to meet some unforeseen precaution. For example, if somebody thinks that they're going to incur some expense because of some health reason or some unforeseen reason or accident, so people will hold money in cash so that they can meet that expense. During the times of wars, famines, economic fluctuations, people will hold more money for precautionary purpose and they won't spend that money on that consumption. If people keep holding more money on precautionary purposes, the same money which they would have spent on consumption expenditure would reduce, right? Because people are holding that money to meet that unforeseen accident or some circumstance which is going to happen in the future. So the people will reduce their consumption currently, because of which the demand would fall and it will have repercussions on the economy. The other motive is speculative motive. Speculation is buying and selling erratically. So if people feel that interest rates are going to rise in the future, they'll hold the money, because instead of investing at a lower interest rate, if I get the opportunity to invest at a higher interest rate, I would wait for some time to invest at a higher interest rate so that I get the benefit of higher interest rate in the future. So now currently, because of the pandemic, the number of people holding money for precautionary motive is increasing during the pandemic. And slowly, now that the pandemic is slowly getting over, the third Omicron is also reducing, people are slowly reducing the amount they are having in the precautionary motive and they start spending that amount. So what will happen if they start spending that amount? The consumption will increase, so the demand for goods will increase. Because of this, the private investment will increase to meet the increased demand, so that the private investment will lead to the production of goods and services to meet the increased demand. With this increased private production, the factor incomes would increase. So this will lead to kickstarting of the economy. So this report says currently this is what is happening, that because of the COVID wave is receding, the precautionary demand for money is reducing and people are slowly start using that money for consumption expenditure. Because of which totally there is going to be growth in the economy in the future. That's about this article. And here we don't need to read this article related to TCS and this study not required. You just need to see that the air turbine fuel prices are rising. It's obvious because of the global crude oil price rising. The turbine fuel, petrol, diesel, everything would rise. So you just need to read the headlines. And you can skip the sports page. And those are the articles related to economy today. Thank you so much.